Let's get back to tariffs, where our next guest says the latest moves, the new letters, the new rates signal some concerns about where the trade war is heading. Tobin Marcus is head of U.S. policy and politics at Wolfe Research. Tobin, what are you gleaning from this? Because markets are now, I think we can say, shrugging this off, right?
Absolutely. I think the fact that nothing is actually happening for several more weeks is all the explanation that you need for markets continuing to ignore this for now. We've had enough twists and turns in the tariff saga that I think anything that's not actually taking effect is going to continue being treated by investors as essentially a hypothetical future prospect. But as we try and look ahead, look around the corner, I do think that the pattern of actions that we're seeing from President Trump this week suggests he's getting ready to keep pressing. There is a bit of a chicken and an egg issue where, market reaction to big things he has done on tariffs is the main thing that seems to have restrained him so far. That's certainly what put the bottom in early April. And insofar as we're seeing a lot of market and economic stabilization, I think that gives him permission to keep pressing, to the extent that he wants to. And I do think he wants to keep pressing. So seems like he's running out of patience with some of these talks. I think the Wall Street Journal reporting earlier this week that Besson had to kind of make the case to him for an extension, make the case that we can get some more deals in the next few weeks if we just allow a little more time and apply a little more pressure. Hopefully it works out that way. But I do think that the president is probably feeling like he has room to press on some of these countries if he wants to.
Well, Tobin, you just said chicken or the egg, and chicken, we've learned, is the president's least favorite market word these days. To what extent do you think he might feel the need to show that he means business, and that's what these letters are about, and perhaps he's going to be determined to press this further than he did last time?
Yeah, I think that he wants outcomes in these talks. I don't think that he is going to be happy with just sort of 10% forever, no concessions, no, nothing he can label as a win in these bilateral negotiations. And the negotiations have been slow so far. And I think he is probably feeling like he may need to make an example of someone at some point in order to get the breakthroughs that he wants. So I would not be surprised to see some of these rates actually take effect on August 1st. I think also in terms of the extent of risk that he perceives from moving forward here, if China is not part of this next wave of actions, if the EU gets dealt with separately, as it seems somewhat likely will happen, and if Canada and Mexico, of course, are kind of in a separate category, having never faced reciprocal tariffs, I don't think he necessarily feels like hitting the Asian export complex hard is going to cause some big market-wide calamity. And I think that's probably true. So I think, again, if he wants to press, if he feels like he needs more from these countries than he's been seeing, I think he has that maneuverability.
Still, I'll be curious if and when, at what point do we really see a bigger market reaction? And we've seen it in some areas. Look at copper. It was up 10% the other day on whatever might be happening. So in sector by sector, Tobin, it does feel like there's an effect. I just wonder, you add it all up, and what's happening with NVIDIA on the AI front, for instance, is more compelling. Of course, even there's a market restriction issue that Jensen Huang is apparently working on right now. But in other words, it's not as if there's no effect or no fallout, but it's just not adding up to something top level right now.
I think that's right. I don't think tariff headlines are going to cause another violent market-wide sell-off like we saw in early April. I think that what we should be looking for are, on the one hand, sectoral effects. If we lock in something with Japan and there's no relief whatsoever granted on auto tariffs, which would be my expectation, that's been one of the big sticking points. Are these 25% auto tariffs going to stick? If so, that matters to Toyota, to Nissan, to anyone who's exporting cars from Japan. And again, we've already seen some of that with these sectoral tariffs. And then I think the other one is when we actually start to see the effects show up, if we get hotter inflation prints over the summer, if we start to see margin pressure from companies that are finally deciding to pass through prices as this drags on and on and on, then that'll start to matter in a more concrete earnings-driven way.